I think that, that we're still in the summer months with light volume, and so you'll have bigger up days and bigger down days. And we don't really think it means that awful much what happened yesterday or what we should expect today, because the markets really do believe that he will speak hawkish. He spoke hawkish less than just 1 month ago, and we've had some pretty strong numbers since that time. I think the market is even prepared for a 75 basis point hike next time. So if he says anything along the lines of, we see some weakening in here, but we're going to be measured, and that sort of measure type idea, I think the market would really continue to cheer that it's not going to be continuing draconian.
AJ, you're a little more concerned about things. You think that this is the end of what you are calling a bear market rally. Why is that?
Yeah, thank you for having me, Becky. I think part of it is that the market may not have priced in what the impacts of quantitative tightening is going to be. We do understand that it's going to accelerate from $45 billion a month to $95 billion in September, and likely that's going to put some pressure on rates. And so I think the market has been anticipating or alluding to the fact that the Fed may pivot at some point. We saw that in the Fed futures, potentially pricing in a cut in February, but a lot of that has pulled back from some of the comments that have come from many of the Fed governors. And so I think the market is trying to time out an easing, but I don't think that's the message that's going to be broadcast today, and that hasn't been the message that we've been hearing from the Fed governors.
So you both have different opinions about what comes next and how calm or not calm the markets are going to be about it. AJ, why don't you talk about your strategy? If you think that a pullback is to come, where would you be telling investors to put their money, or would you be telling them to get out of the markets?
I think what we're telling our investors is that we're slightly under equities. We like fixed income, but more on the short duration side as we see more rate hikes coming. But we think that there's going to be a buying opportunity to move into equities, possibly sometime in the fall. September, we expect to be quite volatile. To the comments made before, we do believe that some of it might be the low volumes in the summer, and that September we believe is going to be, there's a bit of a sell-off there. We like U.S. equities over some of the non-dollar developed markets just because of where the U.S. is from the tightening standpoint, as well as how we're handling inflation relative to UK and Europe, which is seeing double-digit inflation, and also the potential for inflation to move much higher there, especially as they still face issues with energy supplies, net importers relative to the U.S. as a net exporter.
Linda, where do you see opportunities right now in the market?
Yes, I'd like to emphasize that we at Federated Hermes are actually quite concerned about the markets in here. Don't want it to come off in any other way. We've actually recently reduced our suggestion for equity exposure and lifted our cash exposure to really the highest level since I began my career there about 32 years ago. We think that the markets do not appreciate the fact that inflation, even if it has come off the peak, is going to be stubbornly high. We continue to see evidences of the 70s all over again. And so, if we have a bear market rally, and I agree definitely with what the other guest has said, this is a bear market rally, and anybody who's gotten bullish in through here since the middle of June has done it for technical reasons and not for fundamental reasons. We all know there are many, many problems that we have to face here in these next 12 to 18 months. So we at Federated Hermes are suggesting a wide range, probably, while inflation comes down very, very slowly. We are cautious and conservative with an overweight on cash, a very strong suggestion towards high-quality dividend securities. And all you have to do is see energy being strong and utilities being strong coming out of this rally to know that defense is still the name of the game.
Shepard Smith here. Thanks for watching CNBC on YouTube.